Anas, so nice to meet you.
Yes. Nice to meet you.
I really appreciate you taking time out today to be with us. And I don't know if you heard Steve talking about Lagarde being a little nervous with this being her first ECB announcement and press conference. But
Yes,
I bet professional speakers like you and me, Anas, we don't get nervous. The bigger the crowd, the calmer we get, right?
absolutely.
I mean, I love to have a large audience. I have attention deficit disorder. I can never get enough attention.
Well, I am the same. I remember the first time I walked into a lecture room with 520 students,
Okay.
and the fun part was the microphone did not work, so I have to speak without a microphone.
O-
And I learned that I can project in this case, and I learned that I have a loud voice.
Okay. All right. Well, I read about your background. Interesting that a lot of your education happened in Oklahoma. Is that how you ended up having an interest in the energy business, all things energy? What was it that attracted you to it? Or was it where you grew up in the Middle East that, black gold was really one of the most, uh, you know, at risk and wealth building for major nations there? Everyone thinks about the price of oil there, don't they?
Sure. My playground was the ground of a gas station. My grandfather had a
Okay.
gas station, and that was the playground.
All
So
right.
when people get sick from the smell of gasoline, I get homesick. Um,
Okay.
and
All right.
I got my undergraduate education in Saudi Arabia, and
Okay.
then one of my professors understood that I have a great interest in the oil business, and he told me to go to the University of Oklahoma because it was number one at that time, number one worldwide, not only in the United States.
Oh, wow.
So I had earlier interest in this than just coming to the University of Oklahoma, and I really enjoyed being there. And there was a time when the University of Oklahoma had the largest number of professors involved in the oil industry relative to any
Interesting.
other university. Yes,
I didn't know that. I know that in the, earlier part of the last century, a lot of the major finds were in Oklahoma. It kind of uh, gave it renewal after the Dust Bowl was finding oil there.
correct. And probably that's what made the University of Oklahoma the recipient of money and other things and interest in oil.
Okay. So I want to talk about, I went over your website. I want to talk about what you're concerned about. And, there are all kinds of concerns in the shale oil industry right now. Mainly what I'm starting to hear about is a lot of the debt that a lot of these fracking companies have taken on. It's junk right now at risk that could have some systemic effects later on, maybe next year. But you're worried about the quality of the kind of oil that's coming out of the ground through fracking. Can you tell us about that?
Sure. I think the whole debt problem is originated in the idea that those investments are going to pay off. So the problem of those companies is not the debt. The problem of those companies is they couldn't deliver what they told investors simply because of two factors. Something I called shale quality, and the other one is crude quality. So when
Okay.
it comes to shale quality, think about it this way. We have some areas here in Texas where about 40 to 45% of what's coming out of the well is natural gas and NGLs.
Okay.
And we are suffering right now from the curse of abundance. We have so much gas and so much NGLs that their prices collapsed.
Yeah, natural gas really took it on the chin again. It's every once in a while it comes to life. They call that market the widowmaker. Have
Yes.
you ever traded it, nat gas?
Well, I used to work for Natural Gas Partners. The whole
Okay.
company was 100% gas at some time.
Hmm. Okay.
Uh, so if you are a producer in Texas in some areas, that gas is either flared or sometimes sold at a negative price, or you get some price for it. NGLs lost 50% of their value. So the only money you are making is on the 55% of crude, and that's it. So really what made the debt issue come to light is the quality of shale. If that shale was 100% crude with API below 45, no one will be talking about that debt issue today, even at $55 oil. The
Okay.
second point is whatever left in that 55% to 60% of crude, that crude is light, sweet, and super light condensates and NGLs. And that is
All right. For our listeners, you want to tell them what NGLs are?
yes, that's natural gas liquids.
Okay.
That's
Okay.
different from LNG. LNG is liquefied natural gas. We have to manufacture it, basically. We have to make it. But
Right.
NGLs is natural.
Okay.
So with the crude, we have a serious problem. Every addition coming online today, every net addition coming online today, have to be exported because we did hit a refining wall in the United States. Our refiners cannot take that crude anymore. So we have to export it. And if you look at the forecasts of the International Energy Agency, for example, they are expecting an explosive growth in shale production. And my question is, look, if that's going to happen, we don't have enough refining capacity to handle it, even worldwide. And their response is, no, don't worry about it. Refiners will invest to handle it. My reply is, no, they are not going to invest. We are going to see some investment. But even when you look at some
It takes a
investment,
lot of time to build a refinery, doesn't it?
well, there are two issues here. The first one is the shale cycle, as you know, is a short cycle. But when you invest in a refinery, it's a very long cycle. You are talking about 20 to 30 years, while the shale cycle is 2 years to 3 years.
Okay.
So there is a mismatch here. And the other issue is those refiners are not going to invest to handle the shale for a simple reason. All forecasts point to the fact that the demand of the future for oil is going to be on the heavier sides of products, not the lighter side.
Brent.
Well, even heavier.
Okay.
I mean, we are talking about medium to heavy.
Okay.
Because, for example, when you
Where's
look
that?
at,
Saudi Arabia?
well, it is the Middle East. It's
Okay.
here in North America. Of course, we have Canada, we have Mexico.
Okay.
So all those crude, especially in Latin America too.
Venezuela.
Would be correct.
Okay.
But the idea here is those refiners are not going to invest heavily to handle the shale because the type of demand we are going to have in the future does not encourage investment. And therefore, we are going to hit refining wall worldwide.
Because of EVs, I mean, that's one of the reasons the Saudis gave for the IPO of Saudi Aramco to diversify away from oil. So if one of the major producers wants to diversify, who wants to make long-term investments for capacity? Is that what's going on?
That is, we can go back and discuss this issue because it is possible that this IPO has several objectives, and probably the issue of diversification is because of the money of the IPO, not because oil is in danger.
Okay, they need cash.
Correct.
And so, and anytime you take something out of private hands into public hands, it's because they want to cash out.
Well, not really, because if you look at their objective, and I'm just speaking about what's written and what they are officially saying, their objective basically is to diversify the economy.
Right.
You need massive amount of money to invest in certain technologies.
Okay.
And that money is not available by borrowing, is not available from the private sector, is not available from the banks. So one way to do it is to sell some shares of Aramco to get that money to invest in some other things that can diversify the source of income.
Right.
And the objective basically is by 2030 and after, if there is any fluctuation in oil prices, the economy will not be hit as it's been hit in the last 40 years.
It's reasonable.
And they won't be a victim to politics and environmental politics, etc. So that's really kind of a main objective of the diversification. However, there is a big problem here. The problem is they have oil for 70 years, and they couldn't basically even produce technology out of that crude or out of that oil, which means that they are still dependent on Houston and Aberdeen and other major cities in the West. So if they fail to transfer technology of oil in the last 70 years, what will guarantee that they can transfer a new technology that never existed in the first place in that part of the world?
Nothing.
So there is kind of a danger here. I mean, it might succeed, but there is no precedent to support the idea. But what are the choices? They have no choice. They have to go and take this road regardless, because the risk, if they continue on the same path, is very high.
Okay.
So it is a risky approach, but probably they have no other choices.
Okay. All right. So when you're talking about this hitting the wall, the outcome would be frackers capping wells again, like they did the last time crude fell beneath $40. Is that what's going to happen, or
this
what?
is a great question, Dale. Here is the issue. Because shale is not going to deliver, then market balances in the forecast are going to be messed up. And therefore, we are going to be short oil because that crude is not going to be there. At the same time, we have no replacement because they already scared investors worldwide not to invest because of shale. So we might end up with an energy crisis, and I'll explain the demand side in a few minutes. But what we are going to end up with is oil price, let's say, at $90. That's, I'm talking about Dubai and Oman and Arab Light, while frackers in West Texas will be making only $40, like you said.
Wow.
$40. So the price differentials will be unprecedented because quality of crude is related to the price differentials.
Okay.
But because of the wrong forecasts, overall prices are going to go up.
Okay.
On the demand side, we have other problems. For example, they are predicting, and I'm talking about OPEC and IEA and others, they are predicting that oil demand will decline between 8 million and 12 million barrels a day in the next 25 years.
Because of electric cars?
No, because of fuel efficiency of current cars.
Okay.
This is unprecedented. We never had this improvement in history. So why we are going to have it now when technology has peaked? We are using lighter metals. That's why technology peaked, because there are no other options. So we are using lighter metals. To move to a lighter metal, if you take the Ford 150, for example, the cost might go up by 50%. And Ford will never do it because that's their best-selling truck. And we ended up with smaller cars, but those smaller cars cannot get smaller than our bodies. So we maxed on technologies.
I've sat in a few, Anas.
Yeah. And, so there is no way. And if you look at the current trends in transportation, whether in the US or China or other places, everyone is moving to crossovers and SUVs.
That's true.
The sales of smaller cars been declining for several years. So when you look at the average fuel efficiency here in the United States, we've been flat for the last 6 years. So
Yeah.
that predicted decline is not going to happen, and therefore demand is going to be higher for oil. On electric vehicles, we do have some serious problems. Now, I am for electric vehicles. I support electric vehicles. I would love to have one. I don't mind owning one, but I am against the hype of the impact of electric vehicles. So I'm not talking about the hype of electric vehicles. I am talking about the hype of their impact on the oil market. For God's
Understand.
sake, some people are predicting that oil demand will peak next year.
Mm-hmm.
That's how how high the hype is.
Who's putting out this narrative? You would think it would be producers putting out this narrative so that
No,
things
not
stay
really.
the same.
There are a couple of research places and couple of kind of agenda-driven research centers basically are producing them. I am not going to
Okay.
name them here on the air, but
Okay.
they know. But
Okay.
just to give you how bad the narrative is, they tell you that LA in California is buying electric buses. And then in their reports, they show you how much oil they replaced in California. Here is the problem. There is no single bus running on diesel in LA. All of them are running on CNG. So basically, it's a lie.
Okay.
The electric buses are, in some areas in the world, are replacing gas buses. Gas, what I mean is natural gas. That's compressed natural gas, CNG. It's
Okay.
not.
So, I mean, these mainly have to be environmentalists that are so against carbon, anything carbon related, that they're actually propagating things that say we're not going to need oil, which leads to malinvestment or no investment in refineries, and the quality of our oil fracking is dropping. So it looks like we have a perfect storm brewing in the crude oil market. You have most people bearish crude because they're worried about recessions. What you're saying is you're building the case for looking for the right oil assets to own for when this narrative is exposed for being a con job.
But there is an irony here. The irony is, if my theory is correct, and the demand for gasoline is going to be higher because the efficiency, the fuel efficiency, and because of electric vehicles, then the demand for shale is going to go up. So all of a sudden, shale becomes really the place to go back to, because with shale, we produce a lot of gasoline.
Okay.
So in a sense, it looks in the beginning of this cycle that shale basically will suffer. But after a while, all of a sudden, it is the oil to go to because we need a lot of gasoline to fill in the gap.
So it's kind of like the silver of the precious metal complex, poor man's gold. And eventually we go to it because of what it could do, and the price makes it attractive.
Yes.
Okay,
Yes.
very interesting.
And one more
ahead.
idea on EVs. If you go back to 2007, 2008, everyone was talking about natural gas vehicles.
Right. That was.
And we used to do modeling basically, and the forecasts were almost similar to EVs today. I mean, not as much, but
that was like a T. Boone Pickens initiative, wasn't it?
Absolutely.
Okay.
So what happened right now is some of the forecasts for electric vehicles are taking over the forecast of natural gas. And therefore, the oil demand is going to be way higher than what people are expecting, because it's really the impact of electric vehicles is on the natural gas market and on what was going to happen in the natural gas market that did not happen.
Okay. So I really think that I have a main theme that you're talking about. Do you consult people besides your speaking engagements on what areas of investment they might
I
want to start
Yeah,
looking at or considering?
yes, but
Not in
mostly
public.
not in public. Correct.
Okay.
And the whole issue. I mean, here is the bottom line. The bottom line is for the initial period of this crisis, all of a sudden, Canada, California becomes the hotbed for investment in this case because that's the oil that everyone needs.
Okay.
And in the second cycle, we go back to shale, and that's why I I I predict that we are going to have multi peaks in shale production instead of one peak.
Okay. So, any kind of time horizon for the different phases of this cycle?
That's very tough. And whatever I say,
That's the
basically,
art of it, right? I know.
correct. But I think we will start. We already, in terms of quality of shale and crude quality, the cycle already started. The reason why the industry is suffering today because of the quality of shale. The reason why we are having some problems in refining today and why refinery utilization is low is quality of crude. So the cycle has already started. But in terms of where the general media and the general public will start talking about it, probably we need another year or two.
And what kind of price for WTI do you think we'll be at? I mean, we've been range bound in this market for such a long time, Anas. Do you have a bias for price movement at all in the crude market?
I'm going to say something that probably will shock some people, but once they think about it, they will understand. Right now, the way we see it is we have a decline in seasonal demand in the first half of 2020.
Okay.
And that's why OPEC cut production.
Okay.
The problem is we are going to see changes in the second half because of the US presidential election. Whether we like it or not, the oil industry in the United States and overseas is a Republican industry. This industry supports Republicans.
Okay.
And we have seen in the past with the election of George Bush Sr. or George W. Bush that countries increase their production to lower prices to support the election of those presidents. We've seen those presidents using the SPR, the US SPR, to lower prices.
Right.
So while we can make a very strong case, very strong bullish case for oil in the second half, the presidential elections are going to ruin it.
Okay, why? Because you're predicting Trump won't be reelected?
No. For Trump to be reelected, he wants lower prices, and he's going to get some cooperation from some oil producers outside the United States, and he's going to use the SPR.
Well, the Saudis could do no wrong with our current president.
Absolutely.
Okay.
But the idea is, it has nothing to do with Trump, by the way, because it has to do with a Republican president.
Yeah, I mean, he says he is.
Okay. What I mean is, if there was someone else in office but Republican, they will do exactly the same.
Okay.
But the idea here is we do have enough evidence to show a bullish case for the second half of 2020, but presidential elections, given the history, we are going to see some relaxation of the quota in OPEC, and we are going to see a big release of the SPR to maintain prices probably around current levels.
Okay, so they want to just peg it.
Correct.
So we're going to say pegged in a range through the elections, and then something else happens.
Correct. By that time, everything might explode on both supply and demand sides. At the same time, we have to be very careful. Here is the other shocking piece of information. China built a massive strategic reserves. Here in the United States, those strategic petroleum reserves are regulated and heavily regulated. So they are released only in case of emergency or if the Congress agreed to finance the management of the SPR, the Strategic Petroleum Reserves.
Okay.
China does not have any regulations. and they bought that oil at 40 and 50 and $60. If oil goes to 85, they are going to sell most of it.
Okay, because it was a hedge for this or a
And
trade.
correct.
Or was it just a trade?
It is just a trade. It's about money.
Okay.
Because they have no regulation. So what happened is our upside is capped by China.
Interesting. Okay.
And what
Because I mean
happened?
they've been stockpiling wheat, but and gold and everything, but the wheat I don't think was a trade. It was a hedge against famine, which they're having some trouble with their food supply right now.
That's possible, yes.
Yeah.
But for
So
oil, the idea here is they can dump that oil in the market, and here this is going to be a kind of a double-edged sword because to the oil market, because that's going to reduce China imports because they are going to sell it in the domestic market first.
okay.
So we are going to see increase in supply and reduction in demand at the same time.
That would augur for $30 crude.
Not really, but at least when we hit 85, for example, that's going to cap it and reduce it back.
Okay. So you see 85 as a ceiling coming into any type of bullish, constructive bull market. 85 is your number.
Yes.
Okay.
Yes.
Well, I was going to ask you a few things, but time's wrapping up. It was fascinating talking to you. I enjoyed hearing the narrative. I learned, we can learn from everybody, and really appreciate you coming here to edify our community and us, and everyone. You could follow us on Twitter. It's his name right here. See it? Just put the @ here. And you could go to his website as well and take a look at some of his videos. He has some pretty interesting stuff. I'm going to check this one out later. Is Trump an anti-oil zealot? So we'll see if that he's an exception to Republicans. Anyway, this is going to be a wrap, everyone. Good luck on the UK election. One last question, Anas.
Sure.
Does a dollar or currency play into your equation when you're talking about forecasting what could happen to energy?
Big time. And on my website, there are a couple of articles, and some of them are in foreign languages, including Arabic. And
Okay.
there are, I think, $1 article is published in 6 languages.
Okay.
People can check it out. Yes, it plays a big role. In short, lower dollar, basically.
Higher prices.
Correct. And there are
Nominal
reasons for
gains.
that.
Yeah.
They are explained in those articles, what the dynamic and how it works.
And the petro currency is safe as long as Trump is in office, because there has been talk over the years that eventually Saudi may de-dollarize their oil sales.
I explain in those articles why they cannot. There is no way they can. There is an article on the website. I think the title is "Why Does OPEC Price Its Oil in Dollar?"
Okay.
And it explains the reasons why they cannot switch.
What a great interview. I hope we could do it again, maybe early next year. Anas, I really appreciate it. Anyone who comes on this show, I call them my trading warrior brothers. So like it or not, you are one now.
Oh, thank you. Thank you very much. I'm honored.
Okay, and I'll just end this with, remember, don't just count your barrels of oil, count your blessings. Inshallah, Anas.
Inshallah. Inshallah.
All right. Okay, everyone. We'll see everyone tomorrow. Good hunting. And that's going to be a wrap for me and you. Thanks again, Anas. Bye-bye.